All right. When we're talking about a government shutdown, again, we're going to have a lot of equity analysts and people focused on the stock market saying it's not going to have the big impact. What about the bond market? We have had some guests that at least expect some reaction from the bond market if there is a shutdown.
Yeah, we could see bond yields increase higher based upon the uncertainty of what the Fed might do with the withhold of that information on the job markets on Friday if the government shuts down later today. So, yeah, all eyes are on the bond market, but we believe it's going to be short-lived. Federal Reserve's in a decreasing rate environment, so that bodes well for bonds in the long term. But right now, we could see yields spike later this week.
All right. So I understand you think it's going to be short-lived, but I think we're seeing a lot of divisiveness on those two sides. Alice Barr did a great job kind of laying out some of the rhetoric going back and forth, including what appears to be AI-generated videos and, some name-calling, just to keep it polite right now. Are we sure that it's going to be short-lived? And if it's longer than expected, does that eventually have an impact on the equity market?
It certainly could. The longer if every week that you have the government shutdown, it shaves about 10 basis points off of the GDP longer term. So that's an issue and something to pay attention to. But if we go back historically looking, if you go to what the markets perceive, the last 4 out of the last 6 shutdowns, and we've been here before, oh, by the way, the week before the market has been up 1% on average. 4 out of the 6 times. And the week after the shutdown is proceeded, we've had the market up about 4% on average. So we'll see how this plays out. The longer it goes, the worse it gets, obviously, for not only those that are impacted, but the economy. And then the market will then pay attention.
Is seasonality a factor at all in September? It didn't really seem to play a factor, even though historically we see a 2% decline in the S&P in September. I was listening to BMO's Brian Belsky. He says in years where the market's up about 15 to 20% over the first 3 quarters or 9 months, in general, the fourth quarter returns about 5.5%. Do you see seasonality playing out that way this year?
We haven't seen it so far, and September is usually the worst month, followed by October following through. And then we proceed into a Santa Claus rally. We've been waiting with some cash on the sidelines for that to happen. Maybe the shoe to drop will be the government shutdown and then what the Federal Reserve actually does in October. We're prepared for that. We're positioned for it. But yeah, we haven't seen it in September. So now it's all about October.
All right. Talk to me about some stocks. You gave us a list of stocks that you're pretty bullish on. One of them is NVIDIA. You kind of rephrased don't fight the Fed to don't fight NVIDIA. We're going to show a chart of NVIDIA from last week when they announced that deal with OpenAI and also the Mag 7. NVIDIA's higher, Mag 7's lower. What does that in your mind say about the AI trade and investor confidence?
I think looking forward to NVIDIA, there's another sector or leg up of growth potentially, and that's quantum computing moving forward. The market's also looking at the robotics trade and what they can contribute to that, and industrial automation. So there is beyond just the GPUs and the data centers and all of the excess growth that we've seen. I think you don't want to bet against NVIDIA moving forward because there's another chapter that needs to be played out.
So, Robert, in all fairness, you use this word, excess growth that we've seen. We've seen a lot of growth in a very short period of time. You mentioned quantum computing, which I still think is seen as somewhat speculative. Isn't that a little bit nerve-wracking, maybe creating some nerves in your mind, the fact that we've seen such rampant growth and also investors are looking for other areas to play the AI trade outside of equities and maybe even outside of private markets?
Yeah, we're still in the first early innings of the AI trade. And really what it's going to come down to, that what's going to stop this on the semis is really the corporate spending of basically this war game of trying to grab as many chips as they can to compete for the future. Obviously, we've seen the Mag 7s participate greatly with all their capital spend. And so we're going to continue to look forward and be bullish on NVIDIA until we see that tune change. But right now, I think we're in the early stages. And then when you see the Mag 7, if you will, how they perform post, let's say, when the Fed pauses and then they drop the interest rate in 1996 and 2024, AI or the Mag 7 has taken off.